welcome back to this special CNBC Africa broadcast of this year's national budget allocation for 2024. We'll be crossing over to our team stationed outside Parliament for live reaction to Minister Godongwana's speech throughout the show. And right now we have guests joining us for a panel discussion here in our studio in Sandton. I have Rajen Pillay, Professor at Garuda Capital. And via Zoom we have Reza Ismail, Head of Bonds at Prescient Investment Management, Siphamandla Mkhwanazi, Senior Economist at FNB, and Tertia Jacobs, Treasury Economist from Investec. And I am going to be hosting this panel with my colleague Godfrey Mutizwa, who is right here in studio with us. Now, to start us off, I'd like to address our first questions to the two economists on the panel, both Siphamandla and Tertia. If you had to look at this budget's character, would you say this was a budget for the masses, for the markets, or for foreign investors? Starting with you, Siphamandla.
Wow, what a difficult one to start the conversation, but thank you for having me.
Sorry.
Look, just looking at what the minister had to do from a tax policy perspective, having to raise that 15 billion, which he did signal in the October MTBPS, and the fact that for the next 2-3 years, we are going to see these kinds of taxes increasing. I think from a consumer perspective, it might have been a little bit more negative. We do think that is going to affect household consumption expenditure between now and next year. However, that pressure is expected to be eased a little bit by easing inflation as well as lower interest rates that are expected to kick in sometime later this year. From a markets perspective, I think, as you would have seen with the reaction of the rand, I think the market is looking at this more positively. Debt to GDP is peaking a little bit sooner than what was expected and at a lower rate, although there are some questions as to whether we are actually going to see that, as we have seen in the previous budgets, that we have kept on pushing out this peaking in debt to GDP. So overall, I think the minister did what he could with the limited resources that he was given. Although for the two economic agents, markets versus households, I think households would look at this and not be very chuffed, and markets are probably going to look at this more positively.
Yeah, and I'm looking forward to actually diving into that rand reaction that we saw in just a moment. But before we dive into that, Tertia, I'd just like to get your initial thoughts and commentary in terms of what is the character of this budget? Was it for the people, for the markets, or for international community?
Now, where we sit, in the financial markets, the rising government debt burden, the consistent increase in the debt servicing costs, we spend more than 20 cents in every rand that we receive on interest payments. So in this environment of stagnating growth where, income taxes are under strain, and your spending pressures remain quite high. The focus was very much on what can we do to rein in this rising government debt bill. And I think the big surprise was the government's decision to already factor in, the JFACRA proceeds. We expected an intention, and I think the announcement with some numbers in the budget, although the framework is not in place yet, is probably the big change. And, there's roughly about 30 billion rand of interest saved over the next 30 years by reducing the borrowing requirement. So I think from that perspective, it is positive, but we will only see over time, whether this utilization of the JFACRA is going to be positive in the sense, we're waiting for the economic reforms to kick in. And, say in 2-3 years, the economy is still stagnating. The risk is that we're going to be back where we were today. So very important then that this, the involvement in the private sector in the infrastructure reform, because that is basically what the budget also focused on, gains momentum.
Yeah, Tesha, it's Godfrey here, and I think from my side, what I'm noticing is that the minister is returning to lingo that we used to have during the global financial crisis when economists and market commentators were talking about the can being kicked down the road. Sounds to me like the minister has kicked this can down the road, and also he gave that information to the market. How shall I put it? It was in drips and drabs, but the market was well informed, it appears, in terms of the changes that he is proposing. So I wanted to bring in Reza and ask from a bond perspective. I'm not seeing the bond reaction yet, how the market has reacted to that and how they are taking this, shall I call it, the kicking of the can down the road.
Well, from a bond market perspective, I think actually I'm a lot more bullish than our two previous speakers. I think it was probably the most market palatable, budget presentation that he could have played. I mean, given the constraints that were, shaping towards him, I think it's actually, an extremely bullish, outcome in terms of the bond market. The bond market has reacted extremely positively at sort of 20 basis points down at the back end. So that's up more than about 1.5% on the day from being flat going into the budget. And the rand is also strengthened, right? So the one thing that was actually just, circulated amongst market participants just before the minister started to talk was that there will, in fact, the market was looking for no increase in the size of the weekly bond auctions, but in fact, it got quite a pleasant surprise. In fact, the weekly nominal size of the weekly nominal bond auctions will actually decrease, which is an extremely positive development. The inflation-linked bond auction size will remain the same. And what they are doing is they are increasing the participation rate on the non-competitive auctions. So, and with regards to the debt trajectory, I think that is also unambiguously positive. I mean, it's not a case at which they are postulating that trajectory is going to come downwards because of increased growth, let's just say, that could or could not materialize. No, they are actually saying that we will use real money from the JFACRA account to plug a real gap in the outlook for the debt trajectory. So I think that is positive, and I don't think that there can be almost like a slippage if you're using real money to plug, a real trajectory. So I'm a lot more bullish than the previous two speakers, and I think that this was almost the best hand he could have played, certainly with regards to the capital markets.
Yeah, it's very interesting. When we were discussing the budget with my colleague here, Tanya, if you remember, we were talking about the fact that this budget was likely to be skewed to try to please foreign investors as well as the markets, and it has turned out to be the rand is strengthening. Rajen, I wanted your perspective in terms of what you see as the key takeaway points from the minister here, and feel free to weigh in as well if I am correct in saying that the minister has kicked that can down the road. Yeah. This is going to come back and bite us, though Reza is saying there's real money on the table.
Thanks, Godfrey. I think you are quite correct in certain elements of the speech. He has kicked the can down the road, and I'll be able to debug that shortly. But regarding the budget speech overall, I think it's really very good and very positive. It's the best that could be expected in the current tight circumstances that we have.
And an election ahead.
Yes, and populist to that extent. So there's little bits of populism in the budget if you look fairly carefully. But yes, kicking the can down the road a little bit in some of the areas. But overall, I think the markets should welcome the budget. It's given everyone as much as the minister can give at this difficult situation. My issue that I have is that there is no synchronization between the fiscal policy and the monetary policy. The monetary policy really should be supportive of fiscal strategy much more, and we're not seeing it. So whilst the minister is very clearly trying to boost the economic activity currently, the Reserve Bank has got the handbrake on the economy with high interest rates. The two should be working together to see the maximum effect, and it's going to be difficult. Yeah,
that's an interesting observation, Rajen. And unfortunately, at this point, we are going to lose two of our commentators. That's Reza Ismail, head of Bonds Prescient Investment Management, as well as Sipamandla Mkhwanazi, senior economist at FNB. Thank you very much for your time. We appreciate your being with us today. But Regina, I wanted to pick up a little bit with you on the issue of the populist measures that you picked up in the budget.
Yes. Whilst the minister, for example, is saying that there's no increase in the tax, for example, that's not
Market
actually.
creep is with
Yes,
that.
that's actually not quite correct. There is market creep, and the people going to higher brackets. So overall tax collections is going to be definitely higher. He's thrown in the usual sin taxes. The usual sin taxes on tobacco and alcohol, etc. All of those are actually foreseeable. The slight difference that we have is that the national debt to GDP is putting in about 75%. He's saying that the 2023 was tax receipts were shorter and lower than expected. We expect that with a shrinking economy, that 75% will go more towards the 80%. And I think that in the course of time, as the high interest rates bite into the economy, slows economic activity down, you're going to find that that key ratio of debt to GDP is going to inch up towards perhaps 75, 80%. And when I was talking earlier about monetary policy not tying in with fiscal policy, the minister alluded to as much as 20% of GDP going into servicing cost. We've seen interest rates at an all-time high. And that's always going to be a touchy area for us for this budget and the next few budgets.
And I want to come back and talk to you about that. But let's go to Cape Town, where my colleague Fifi Peters has been busy and has been able to round up 2 ministers for us. And they are key ministers, Fifi, if I may say so. And I really would love to see the expression on their faces when the minister announced what pertains to them. Fifi, can you hear me?
All right. Hi, Godfrey. Hi, team, of course, in studio. Apologies for the delay on my end. It is bustling here just on the streets of the City Hall here in Cape Town, where the Finance Minister, of course, has just finished delivering the main budget. I know that the team in studio, Godfrey, you guys are going to be talking about all aspects of that budget. I just want to draw your attention at this present moment in time to what the Finance Minister had to say about health with the South African Minister of Health himself, Minister Joe Phaahla. So, Minister, thanks so much for your time. It seems as though this time around health was given a bit more money over the medium term. I'd just like to understand what you think about the minister's allocation, of course, to your ministry, and whether it is enough.
Well, firstly, we're very grateful for the additional allocation, because what the minister was announcing, it's the additional allocation, but also restoring some of the other allocations which had also been withdrawn as a result of the, the budget constraints. Now, as an example, just over 11 billion rand over the medium term is being allocated into the health sector to deal with the cost of employment. And it's through that allocation that we will be able to use some portion of that money to deal with reactivating posts which had been frozen, including those of doctors, nurses and other professionals. So that will go a long way also in making sure that funds which would have otherwise been for maintenance of equipment is not redirected into compensation of employees.
And Minister, I see that a small portion, around 1.4 billion or so, has been allocated to NHI. You know better than I the pushback from the private sector to NHI in its current form. I do know that there's a potential football that could be happening also in the courts between yourselves and the private sector. Just your latest stance on NHI and obviously the allotment in this budget and how far it will go.
Well, maybe just in context, as the Minister has indicated, there is still allocations in terms of infrastructure, in terms of health, digital transformation of the health information systems. So that the 1.4, it's in terms of strengthening capacity to prepare in terms of, further skills and just focusing on building the capacity of the institution of the National Health Insurance. That does not include the additional infrastructure and all these others. So we're very grateful we'll be able to continue to prepare. In terms of the issues, in terms of engagement with various sectors, we will continue, as we have said. We're waiting currently in terms of the decision of the President, in terms of ascending to the bill which has been passed by Parliament. But we will continue, as we said, beyond the bill. There is a lot of implementation, the plan for implementation, which will be further engaged with various sectors, including on each part of the bill. As it also gets proclaimed, we will be doing further consultations on those details with the various sectors which have some concern. Yeah.
Minister, thanks so much for your time. So I know that you've got to run. Thank you, sir. Godfrey, that was the Health Minister, of course, Minister Joe Phaahla. I do know that I need to hand it back into studio, but I just want to get a reaction from one more minister in South Africa's government, of course, the newest position, of course, that was created, that of electricity. I've got Minister with me right now. Minister, thanks so much for your time. I know that you said that you felt that perhaps it was another minister whose portfolio speaks specifically to the overall strategy of power that should have taken this interview. But of course, I mean, South Africans love to hear from you in terms of the progress that we are making in keeping the lights on. Just your reflections on the pronouncements in the budget as it pertains to your work in ensuring that load shedding is brought to an end as soon as possible.
No, thanks, Fifi, and good afternoon to the viewers back at home. I think the 2 billion rand conditional grants to help in the rollout of meters is going to help us on the demand side. I'm sure you know that part of our broad strategy, the 5 outcomes of the Energy Action Plan, is to ensure that we have significant interventions on the demand side. We have seen spectacular results on the pilot project that was done by Eskom in the 4 Ways area is now being expanded. But I think with a 2 billion rand injection, we should be able to aggressively roll out across the country, especially on those municipalities that have been identified as part of the conditions for a debt write-off. So demand side interventions are great. And then the taxes on the carbon side are going to spare, if you like, additional investment by private sector to decarbonize, ensuring that there's greater investment on additional generation capacity, especially on the renewable side. So I think it's important because I think the most enduring resolution to the energy crisis is new generation capacity coming outside Eskom. And I think that the introductions of incentives of both the generation side and also the demand side, when you put them together, are going to help us to make significant progress in the resolution of this problem.
Sure. Just lastly, I mean, I know with this budget process, there's a lot of consultations that do take place with the various portfolios in government between yourselves as well as the finance minister before the actual budget is presented. And I do know that perhaps there's certain things that you ask for that is not actually put in the budget. Was that the case in your portfolio, whereby there was asks from the Ministry of Electricity that you unfortunately did not get this time around? And if so, what?
Well, I'm sure you can imagine. I mean, the resource envelope is constrained. I think one of the issues that remains part of the conversation, of course, not necessarily announced here, is those incentives on ensuring that there's an accelerated rollout of alternative energy solutions, especially by households and also any industries, extending just beyond the PV panels, but accommodating, if you like, battery and also inverters, because those are your biggest capital intense, if you like, equipment. So I'm sure that will continue to do that. But I think it's important that we appreciate where the minister was coming from. We will live with what he has given us and look to design bespoke interventions on how best we can assist the household to roll out rooftop solar solutions.
Okay, just lastly, the Just Energy Transition Framework, JETP, what can you tell us? What are the latest developments around that in terms of the monies, how they're being spent, when they're being spent?
Yes, Minister Chris has presented a set of programs that could be candidates to be supported by the JETIP program. We are finalizing with the partners who are led by Minister Chris in that area, myself, and a number of ministers. I'm confident that very soon, and I'm very, very confident very soon, she'll be able to go to the public and say these are the areas of investment. But the conversations have advanced and advanced significantly.
Okay, We hope so. We hope so. So our hope of light is in your hands. Of course, the Minister of Electricity there, Tanya Kgosiento Ramakgope, rushing off to, I'm sure, get to more important matters at this present moment in time. I'm going to hand it back to you. There's a whole lot more conversations, of course, that we'll be having. In fact, I think Balisa is on standby with another minister, and you'll probably hear from her next. Back to you guys.
Absolutely. Thank you, Fifi. And we're going to continue on that note, actually, with regards to electricity, bringing it back to the conversation here in studio and our panel discussion. We, in fact, did lose Tertia Jacobs, but we still have Reza. And Reza, I'd like to address my next question to you. When it comes to the minister's notes on electricity, he mentioned the increase of limit for renewable projects, as well as the increase when it comes to taxes on carbon credits. How do you view this in terms of how is it likely to impact the economy and the sustaining economic growth, as well as the impact on, well, just generally the fixed income market?
Yes. So perhaps let's just take one step back. So, I mean, we know that, for example, we've seen leading up in the past, let's call it 5 or 6 years, there's been quite a significant growth in the stockpile and also the marginal cost of debt, right? And the important, maybe angle of consideration there is that that increase in the debt stockpile was essentially used to finance current spending, right? It was not as though the debt burden was increasing, to actually fund new capital projects, right? So it's quite refreshing then to see that there's also going to be an allocation of capital and allocation of the debt that is raised that goes into increasing the capital base, which is fast eroding here in South Africa, right? So one of the structural impediments to growth is, I mean, it's numerous. I mean, there's sort of low business confidence, it's weak capital formation, it's political uncertainty, all of those structural issues. But at least addressing one of them, which is to invest in whether it's renewable energy or simply in the maintenance and upgrading of the capital infrastructure that we have, will be a very good springboard for growth. And this will be received quite positively by capital markets, as I mentioned early on. So we need to see sustainable real activity. And now we have seen measures that's been taken to stabilize the debt trajectory. So I think the combination of what has been announced today, will be received reasonably favorably by capital markets.
And what about the infrastructure bonds and concessional loans that the minister talked about? How do you view this?
Now, once again, it's something extremely positive. I mean, if you think of the point of view in sort of the realm that I play in, I mean, if we think about fixed income, what it does do is it massively sort of diversifies your opportunity set, right? So normally, investors in the fixed income space would have to choose from ordinary conventional government bonds, or let's call it offshore debt securities, or money market instruments. But infrastructure-related securities, widens that opportunity set, and adds a diversified source of return for fixed income portfolios. So again, this is something that will be extremely well received and has been for some time.
So the bond people are happy, Rajan, and I'm wondering if there's another group of investors that are also happy. The transport people, the car companies. What are we talking about? Producers of electric vehicles being able to claim 150% of qualifying investment spending as an incentive. Is that enough, do you think?
I think from a budgetary perspective, it's good. And it's encouraging, but the entire issue is going to be embroiled in how quickly those projects can come to market. So the incentive, yes, the incentive per se is to be welcomed. It's great, but to bring those capacities, install capacities on stream, requires several other decisions, typically EIA, zonings, NERSA approvals, etc., etc. Yeah. And unfortunately, what we're finding with people who are wanting to make investments in the renewable space, the capital is there to make the investments, and they want to bring big capacities on stream, but all the approvals that may be required don't come together. Yeah. And that ends up in delaying projects. So whilst from a budgetary point of view, the announcements were good, 150% on renewables, increasing the limit from 15 megawatt to 30 megawatt, and 150% of expenditure is great. But how many people can actually bring that on stream as a project to be able to claim that
so you're able
in
to
time?
claim the whole amount.
Yes. And there is going to be a time lag because of, I would say, perhaps a lack of cooperation from other departments which are necessary to allow that capacity to come on stream.
Hopefully, perhaps the prospect of losing power will knock their heads and they will be able to work quicker and faster. But I wanted to also find out from you, was there anything in particular that you found extremely positive, given all of us, before the minister began speaking, were saying this is a difficult act to achieve in this environment. The ANC may lose power in May. At the same time, the ANC could not afford to have the country default on its watch. And so they had to take some very decisive action on the fiscal front.
Yes. To answer your question in total, I think the most positive thing that is done, which may prove to be perhaps unrealistic, is the growth assumptions which he's using. So when you're using the overall brush at 1.6%, and that changes to 1%, the impact on your budgets is going to be profound. It's going to be very profound. And we have a situation where we have a slowing economy, all-time high interest rates. If you look at homes, for example, there's a home for sale on every corner. So it shows you that the handbrakes are being pulled up on the economy, and maybe some of the assumptions might be a bit on the high side.
Sure.
And I think that's characteristic of the entire budget. If it was a bit more conservative in line with this declining, tight monetary policy stance, then the budget would look entirely different.
Absolutely.
So it's come out fairly positive, and I think we would like to believe that that will actually transpire.
A rabbit has come out of his hat, it would appear to be the case. Tanya, I wanted to go back to Reza, because I'm sure his people would have been all over him, and they would have been looking at this budget and thinking, what does this potentially mean in the eyes of the rating agencies? Exactly. So, Reza, I wanted to put it to you. How do you see this budget stacking up in the eyes of the rating agencies? Because that's also something that worries you, right? Because it will have an impact on your portfolios.
Absolutely, yeah. So there are, of course, different classes of, global capital, let's just say, that of which your investment rating is relevant. Now, of course, we are below, investment grade by all the, major rating agencies. The last, nail in the coffin sort of occurred in 2020 in the eye of the storm of COVID. You probably would remember that was the Moody's pronouncement, right? But that has actually not really meant, a significant amount of, let's call it, capital that stayed away from South Africa sort of in the wake of COVID, right? So I think that, number one, capital follows opportunity. That's number one. And I think that what has been the real challenge, in the past 2 years has been the global policy landscape, with specifically in reference to places like the US and parts of Europe, is that the process of policy rate normalization has just made it so difficult to step away from those economies when sort of cash rates were, so attractive there, right? So I think that, coming back to your question, I think that with regards to the rating agencies, there are numerous amount of sort of positive developments that we've seen here in the budget, but it's not as though any pronouncement that they could have potentially made necessarily would have altered the flow of risk capital when you have such big hurdles to the flow of that capital because of high policy rates in places like the US, if that makes some kind of sense, right? So I think that, number one, it will be received positively, but I still think that, the backdrop with regards to where we sit in the risk cycle, that is counting for a lot more, with regards to when we're going to see a change in the tide for capital returning to South Africa. But definitely, yes, just to answer in a very succinct way, I think that, what we've seen today in terms of the evolution of how the debt trajectory moves forward in terms of the medium-term expenditure framework, I think that will be received positively.
Okay, brilliant. And on that note, we're going to cross over to Cape Town with our colleague Fifi Peters, who's standing by with a guest. Fifi, how's it going there?
Yeah, so Tanya, you would have heard in the budget the government right now is trying to do all it can to rein in debt and to rein in debt servicing costs. And one of the areas that the minister highlighted was tapping into multilateral institutions, financial institutions in which they were able to borrow at more favorable terms. One of those institutions, of course, being the New Development Bank, the division or the BRICS New Development Bank, that is. And I do have the Director General of, who's also the head of the BRICS New Development Bank, that is Mr. Monala Ratsoma, standing here with me. And so thanks so much for your time. So essentially you as a multilateral financial institution are seen as an area of help for this government who's trying to finance growth, can't afford it right now, but is looking at doing so at more favorable terms. Just your reaction to the budget, of course, and what the minister did have to say about institutions like the New Development Bank.
Yes, the genesis of this is that the government owns shares in many of these development agencies. And the reason for that is that with the capital that has been invested, much of it must come back, and it comes back with lower costs. So the likes of the New Development Bank over the years have been funding South African government, underpinned by projects. So we have funded Transnet, we have funded ESCOM, we have funded TCTA, we have funded Sanral, and we continue to look for opportunities to fund. And of course, because our money is cheap, and you also tend to give loans that are very long-term in nature. So you're financing cheaply, and also getting loans that are 10 years, 15 years, sometimes even 25 years. So it goes without saying that then we have to bring more collaboration of these multilateral institutions, the likes of the World Bank, the KFWs, many of which operate in this country and are not known. The AFDs, for instance, and we have been collaborating over the last few months as institutions to see to what extent we can help South African government to finance cheaply. We've also even gone further, by the way, as the New Development Bank. We have pledged about $3 billion over the next 5 years to help with climate-related financing. So resources are there. So what we are waiting for is, of course, that we must be given projects where much of the resources can be deployed.
So much being said about this government essentially living beyond its means right now. Yes, it's trying to reverse perhaps a pattern and a trend that has become part of our culture for some time, but the situation still remains that we are living beyond our means. And as South Africans continue to hear government borrowing, the natural question that then arises is government a good payer? I mean, from everything that the New Development Bank has dispersed to this government, how are they holding up in terms of those repayments?
No, they've been paying very, very well. And of course, the source of whether you're able to repay as a government or as a borrower is what you do with the money. So even more so, it just even gives further motivation that MDBs, which are development agencies, must be the underpin. So because we invest in infrastructure, the simple premise of it is that this infrastructure has to multiply in productivity, create growth. And growth, that's where the revenue is going to come from. That revenue is the source of which government is going to be able to repay the debt. So this emphasis on MDBs, in fact, is not really misplaced. It says the government has realized that to be able to generate growth, you need to partner with this type of institution. That is why there is so much emphasis on infrastructure. And infrastructure is one tool that is led by MDBs.
Monale, before I let you go, of course, the BRICS Bank, the New Development Bank, hosting its summit in South Africa later this year. What can we look forward to?
No, it's also going to be the same theme. We're going to be outlining our strategy for the next number of years and what we want to do here in South Africa and what we're doing elsewhere, that can be borrowed for South African context. And of course also demonstrating partnership with other institutions because we are collaborating institutions. So we'll also demonstrate how we work with the World Bank, how we work with the IFC, how we work with the AFTB and the other institutions that are similar to us.
Sure, but with the bigger partners right now, isn't it? Just following the invitation of 6 other countries to join the BRICS.
And of course, I mean, that's the journey that we are embarking now. That as more and more countries, a stronger balance sheet for the bank, it means more work can be done on the ground.
Thanks so much for your time. We'll leave it there. So the sentiments then of the BRICS New Development Bank, very happy to continue funding development of the South African government, of course, and just bearing testament to the fact that government at this present moment in time is a good payer. Tanya, we're going to leave it there and maybe try and get a different view because so far we have received all positive feedback from this budget. Let's just see if there is someone who thinks differently here on the streets of Cape Town.
We look forward forward to finding that person and to hearing more. But bringing it back in studio, one aspect that we haven't talked about just yet, Professor Pillay, is this increase in tax, the 15% tax that the minister spoke about for international companies that have revenue in excess of 750 million euros, taxable profits, regardless of where the profit is actually made. How significant is this?
I think that's really important and very significant. And I think perhaps the markets may have missed this, because if you look at the share of tax receipts in South Africa, personal income is about 740 billion, whereas corporates is around 302 billion. That is the typical income tax receipts. Now, one would argue that 302 billion should have, from the corporate sector, should actually have been much higher, gauging their level of investments, of activity, and the massive turnovers that we have compared to private individuals. So we've always argued that the burden on income tax, personal income tax, is too high. This 15% minimum corporate tax, I think, will eliminate a lot of the flat lining that we've seen in corporate tax payments. So it might be that the numbers for corporate taxes go up significantly more than could have been expected, which will yield much better benefits from a budgetary point of view.
Yeah, I think this man must be applauded. I mean, he's managed to make all constituencies happy. And as a final word, Reza, if I can come to you, a final word. Oh, is he gone? He's already gone. He's already gone. I think from what we heard all around, it appears everybody got what they were looking for. What a man.
So, but my last question is, was there anything missing from this budget speech?
No. I think it was all put together quite nicely, provided, of course, as I said earlier, that the overall forecasts are met. If the overall forecasts are met, then there's not going to be any clawback later on as we move down. But as Godfrey said, the can might have been kicked down further down the road, and it's nicely presented.
And certainly when I'm looking at the market's reaction, what we're looking at right now is the all-share index down 0.07%. We're down as much as 0.5% earlier. And rand dollar, that big jagged edge that we got when the minister began speaking and we got the information, has been maintained. We're still stronger. Where are we? 1881. There on your screen, 1881 against the US dollar. And I'm almost certain that the bonds have been holding up to the gains that we saw earlier. But Professor, thank you for your time, sir, again.
Thank you.
Pleasure joining you. Thank you so much. That was Professor Rajan Pillay, Professor at Garuda Capital. And we also had via Zoom Reza Ismail, Head of Bonds at Prescient Investment Management, Sipamandla Mkwanazi, Senior Economist at FNB, as well as Tertia Jacobs, Treasury Economist from Investec, for this panel discussion on Budget 2024. Now, we will continue to have reactions coming through from our team in Cape Town, and we'll, of course, be digesting this in closing bell at the top of, at 5 p.m. Central African time. Thank you for joining us for this CNBC Africa special broadcast, and we'll see you soon.